All right. Hello, everyone. I'll just give it a few seconds for the notification to go out, but hopefully you're hearing me okay. Let me know in the comment sections if you can hear me. I've just sort of linked my microphone up to my laptop, so hopefully that's all working okay. Let me know where everyone's watching from, and just fire away with any questions you've got as well. I think we'll pretty much rip straight into it. If anyone's got questions they want to ask or topics they want to hear me talk about or anything, I'm a pretty open book, so definitely fire your questions through. I thought this would be kind of like a cool thing to do just to wrap up Movember. So, oh yeah, we've got more people coming in. Got 10 people here. Awesome. Yeah, so I thought this would be a cool thing to do to sort of wrap up Movember. Obviously been doing the Mohnish Movember videos kind of right through the month, so thought it would be cool to end with something on kind of the evening of the 30th to sort of wrap that all up. So the other thing I was going to do on this video is I'm also going to do sort of my last donation to Movember as well. So I've been sort of donating all the ad revenue from all the different Mohnish Movember videos, kind of from each and every video that we do. So the ad revenue reporting or analytics hasn't kind of come through from the last Mohnish Movember video yet, but yeah, I'm going to kind of make an estimate based off what I think it's going to earn, and that latest video has been doing really well. So I'm probably going to donate something like about $40. I will do that very shortly, and I'll also try and post a link to the Movember page if anyone's sort of interested in donating as well. So that would be cool. Tyler K says, "What's up, Tom? Cheers from Victoria, Canada." How's it going, Tyler? Awesome. We got 14 people on now. I'm just going to grab this Movember link, but definitely fire through any questions if you have any. I'm keen to talk all things investing or otherwise if you've got any questions. I try to do these live streams sort of every couple of months. How's it going, Krishna? Yeah, try to do these live streams every couple of months. I've been a bit slack with them lately and got a pretty good response to some of the previous ones I've done. So might try and make it a regular thing if you guys are interested. Krishna says, "Loving your content." Appreciate that, Krishna. Been putting sort of more and more effort into it lately. So appreciate all the support that you guys have been giving me. The channel's been growing really nicely. So that is much appreciated, and the Movember link is just in there now. Keep the mustache. A few people have said that. I don't think it's got long to go. I think it's probably going to disappear by tomorrow, and I'm going to try and restore the beard that I usually rock is the plan. But I did say on the previous video, if Mohnish rocked up to this live stream or turns up and donates like 10 grand or something, maybe I'll keep it a little bit longer. But I'd take a fair bit of convincing to do that, I think. Roy says, "Yep, I'm assuming that means you can hear me, so that is cool." Either that or you're interested in seeing more live streams. Where is everyone tuning in from? So we got Tyler from Victoria, Canada. All right, we've got a question. A2 Milk, what do you think? Should I hold? I'm down 20%. Yeah, so pretty much the only type of question I don't really answer on these is like buy, hold, sell recommendations. I can't like legally give you that info, and even if I could, I don't think I would. I think you should pretty much do your own due diligence. But yeah, I've got a video on A2 Milk if you want to know my thoughts. In that video, I've got kind of like an intrinsic value section as well, and what I kind of roughly think that it's worth. It's a stock that's been on my watch list for a little while. I haven't ever purchased shares in it because it hasn't quite got down to the price where I would kind of look at buying into it. So that's kind of my thoughts. I like the business. I had a couple of comments after doing that A2 Milk video on basically competition from other companies, and that's an area I probably need to do more digging on. I think that's potentially the biggest threat to A2 Milk continuing to grow at really high rates out into the future. So be interesting to see what plays out there. But I'm sorry I can't give you a buy, hold, sell recommendation on that. Machine NZ says, "Hi Tom, great to catch you live. Appreciate that." John Paul says, "Hi Tom, love your videos, learn investing, and I like your video about learning from your gurus. Kudos. Thank you very much." Roy's calling in from Sydney. Awesome. Salil, hopefully I'm saying your name right. "Hey Tom, greetings from Singapore. Fair to assume you want to be an investment manager with a value orientation. What are your long-term plans with these videos?" Yeah, that's an interesting question. I Right now, I'm just kind of focusing on scaling up the YouTube channel, continuing to do that, and continuing to learn as much as I can. I'm definitely not opposed to the idea of possibly managing money at some point, but that's definitely further down the track if that did ever happen. And I'd kind of want to build a longer track record myself. Like I've only been investing 3 years, so I want to build up a bit of a track record and feel comfortable moving into that area. Like it's one thing, investing your own money and, possibly making some mistakes with your own money and all that kind of stuff. But when you do it for other people, I just need a bit longer track record before I sort of start thinking about that. But that's, potentially an option longer term. In the short to medium term, I'm just going to keep, plugging away at the YouTube channel and continuing to grow that because I really, really enjoy it. It's a pretty cool thing to do. So thank you for your question. Boris, hey Tom, pretty crap weather in Taranaki. Yeah, I'm in Hamilton and it's pretty much the same. John Paul says, hi Tom, are you planning any meetups in Auckland? No meetups planned at this stage, but I have had the odd request to do that. So if that's something people are interested in, definitely open to doing that. We need to figure out, I'm obviously based in Hamilton, but I travel a reasonable amount. So maybe I should, head up 2 or 3 centers, or maybe I just put it out on all my socials when I'm in a particular area and we sort of do it that way. But it would definitely be cool to meet some of you guys in real life. That is for sure. Henry says, hi Tom, how's it going, Henry? Machine NZ from Taranaki. Nicholas asks, hey Tom, how do you trade over the counter from NZ and thoughts on doing that? Yeah, I have never bought an over-the-counter stock, I suppose. So I have had one investment actually where it was quite a small market cap and the brokers that I use don't offer it. So I'm sure many of you know by now, but I use Hatch for sort of all my US investing. So there was one stock that fell under their sort of market cap requirements for them to hold it. I actually didn't end up buying it into it in the end for other reasons, for actual the investment case itself sort of reasons. But I think if you really did want to get access to some of those smaller stocks at this stage, I think you would probably have to sign up with a broker actually based in the US, maybe something like Interactive Brokers or something like that. I've had a go at signing up with some of those companies before, and it's like an absolute nightmare of paperwork and stuff in my experience. But if you really do want to go down that track, that's probably something that you may have to look at. No worries, thanks, appreciate that. Tyler K, with lockdown slowly coming back and COVID numbers skyrocketing globally, are you expecting a market crash similar to March? Yeah, no idea. So I think there's definitely there's always good arguments that there's potentially going to be a market crash, and you pretty much always look like an idiot if you're predicting it and things just keep going up. So that's not a game I play. Like my investment philosophy is to focus on the micro for the most part, rather than the macro, focus right down on individual business level. I think it's hard enough often to get your head around what individual businesses are doing, let alone figure out what's going to happen with macroeconomics and so on. So possibly there's going to be another crash. I don't know. I can't predict it. I don't play that game, but certainly, volatility is the friend of the long-term investor, particularly if you have a sort of value orientation. Like I was watching an old interview that Warren Buffett did with Ajit Jain over in India. I was just watching that today. And he got a question about volatility, and he said it doesn't really worry him if a stock is worth X and then it trades at 0.5 of X, and then 3 months later it trades at 2 times X, and so on. As long as you know what X is, as long as you know what the value of the business is worth, volatility is your best friend. So who knows if there'll be another market crash, but that's kind of the way I think about what I would do if it potentially happened. So appreciate your question. Krishna, Tom, can you please do a video on your portfolio? Yeah, no plans to do that at this stage. I have mentioned some of the stocks that I owned. I've mentioned a few of the stocks that I own on the channel before, but I've never done sort of an overall portfolio video or anything like that. My main reason for not doing that historically has sort of been that I don't want people purchasing into stocks just because I own them. Like I'd much prefer to continue doing the odd, stock analysis type video and talk about, different businesses that I don't own for a particular reason, or I do own for a particular reason, or it's on my watch list for a certain reason, or whatever. I think that's a lot more valuable for actually making investment decisions rather than seeing my portfolio. But who knows, maybe one day we'll go down that track. Hamar says, greeting Toms, watching you from Portugal. Will you ever make a hedge against inflation? What portion of your portfolio do you hold in cash? Yeah, sure. So the cash one's an interesting one for me specifically, which I'll get to in a sec. But in terms of inflation, I've got a couple of videos on this. So largely my approach to managing inflation is to buy businesses with pricing power, basically. So I made a video and I mentioned, I think the two businesses were Coca-Cola and Apple, and I basically looked at the rate of inflation over probably like 80 years, I think, in the Coca-Cola example, not as long in the Apple example. And I basically compared the price that these businesses were selling their products at versus the inflation rate. And basically you could see that really high quality businesses were able to sell their products for, increasingly higher dollar values year after year. And they were able to ramp those prices up faster than the rate of inflation. So that's kind of my approach to it. A lot of people look at things like gold and so on, but long-term the returns haven't been that good. And I'd much rather own sort of cash-producing assets. So that's kind of the way I think about that. And yeah, on the cash part, so depends how you measure it for me at the moment. So I've basically got like a house deposit set aside at this stage, looking at possibly purchasing a home in the next year or so. So if you include that, the cash portion is a reasonable chunk. If you don't include that amount, maybe 15%, something like that, ballpark. So appreciate your question. Shashi Guru Focus says, hey Tom, shout out from Dubai. Awesome. Got viewers worldwide. T.Y. Warren, hi Tom. Thanks for good videos. Keep it up. Appreciate it. David Kane, have you considered reverse engineering any guru trades or doing a bull versus bear case with another YouTuber yet? Yeah, that second part of that is a really interesting idea. I guess reverse engineering guru trades, that's probably what I do a lot of the time when I look at 13F investments. So, looking at Pabrai's 13F or Buffett's 13F, trying to understand why they bought into certain businesses. And if I can figure it out, or if I think I've figured it out, then it's potentially something that goes on my watch list and I look at. And if I can't figure it out, well, then it's a pass and I kind of carry on to the next thing. Bull versus bear case with another YouTuber for a particular stock would be a great idea, I think. I've done a live stream with Brad Counter, for example, on Seritage Growth Properties, but both of us are fairly pro SRG, so it's easy to fall into like confirmation bias and that sort of stuff. So that's a cool idea. Roy, what percentage of your portfolio goes into speculative stocks and what percentage is on the ASX NZX? So yeah, speculative stocks basically zero for me, and then, or at least right now, who knows, maybe that'll change in the future. And ASX NZX, so currently I own nothing on the ASX. Actually, I used to be a shareholder in Domino's Pizza, not because I thought it was really undervalued or anything. That was just one of my very early investments that actually kind of worked out pretty well, but I don't own that anymore. And in New Zealand, currently all my holdings are just ETFs, so I don't have any individual companies in New Zealand at the moment. So Mind Potential, are you going to start riding bicycle like Mohnish soon? No, I definitely ride bikes, but they usually have engines, so that's the only difference there. I did hear Mohnish talking about Shimano once, though, with respect to like shifters on bicycles. So I'm interested in other Shimano products, being the fishing ones, so I sort of test those out. So I don't know if that answers your question or not. Hey Tom, rather than signing up for ASB's market depth chart, is there another site with the same feature/info? I'm a customer of ASB Securities and I see that market depth chart all the time, I think. Maybe I'm wrong on that, but I'm not a huge chart guy, so I don't really pay much attention to that, to tell you the truth. Roy, how much attention do you pay to the ASX versus other exchanges? Yeah, not as much attention as I should pay to the ASX and NZX. I've been trying to look at those more and more recently. It's just a lot of the people I follow and a lot of the resources I use with 13Fs and so on is just really US heavy. So that's kind of where a lot of my portfolio tends to fall. But I need to pay more attention to the ASX and the NZX. NZX has better tax treatment. ASX is almost as good, but not quite as good on dividend taxation. That's not tax advice. And the US is probably at the bottom of the list for that stuff. So yeah, I definitely need to pay more attention to NZX and ASX, but I don't really think about it as sort of focusing on a particular exchange because I think one country is going to do better than the other. It's really about finding individual businesses, and if they happen to be in Australia or they happen to be in New Zealand or they happen to be somewhere else, then that kind of is what it is. Mine potential, do you invest via options? No, I don't. Yeah, I've had a few questions of that, but I've never bought, sold, traded options. After Dinner Investor, good to see you here, Mr. After Dinner Investor. Hi, Tom. Current thoughts on GraphTech and Fiat Chrysler? Yeah, sure. So GraphTech is still something I own, actually. That's a tricky one. I guess the initial thesis on GraphTech was they had these take-or-pay contracts, which, they were sort of guaranteed to have earnings that were going to be equal to the current market cap over the next sort of 3 to 5 years. So that was kind of the initial thesis. I think we've seen a lot of that is a little bit broken. So, we've had a lot of those revenues GraphTech were expecting either just be written off because some of their steel customers have gone bankrupt, or we've had a little bit of it kind of pushed to the back end of these few years of take or pay contracts. So it's one I'm still watching. It's still in my portfolio. I haven't made any changes to it since I first bought it. But yeah, I'll definitely be watching it, and I'm also going to be watching what happens with once these take or pay contracts run out, because they're only over the next 3 years, I think. So whether they can, take advantage of some higher spot prices for GraphTech for the graphite electrodes again, and potentially, do something similar. If they can do that, that would be really cool. If they can't do that, they're potentially a much less profitable business than when we first purchased it. So it'd be interesting to see how that plays out. I'll continue to watch it, and like every few days, I've been getting Brookfield Asset Management filing saying they've been selling, so they're still kind of continuing to sell. And I think the buy under kind of threat is probably not one we need to worry about at the moment. So that's GraphTech. Fiat Chrysler very quickly. So I recently did a podcast with Andrew Brown, actually. So I go into a bit more detail on Fiat Chrysler in that podcast. So definitely check that out. It's just on YouTube. Search Andrew Brown Investing with Tom. But my thoughts in short, basically I agreed a lot with what Pabrai was writing about in March, April, that they have sort of a lot of operational leverage in their business. Revenue goes down a little bit. Earnings can go from, thin margins to very negative very fast. So at that time, I could see Fiat Chrysler potentially, losing 10 plus billion euros. And this is like a 20 billion euro company. So I could see that happening. And I chose to sell about 70% of my investment at about, I think, something like $8 per share. If you look at the chart now, it's like 15. So that's one of the worst decisions I've made this year. But investing is easy in hindsight, so it is what it is. I guess good news is that 30% that I've retained is kind of making up for a lot of the losses that I made. So that's kind of my thoughts on Fiat Chrysler. I'm still holding it because I think the merger is interesting that they're doing with PSA Group, and there's potentially some good benefits there. So I kind of just want to see how that plays out. Roy, like you're not in Sydney buying a house. I don't know if it's that much better in New Zealand, to tell you the truth. Mine potential, I'm going to try and get through these questions a little bit faster. Sorry, we're starting to build up a bit of a backlog here, but mine potential, when and if we should clone gurus, how important do you think copying allocation percentages? That's an interesting question. So honestly, I've never thought about it that way or that much. I think in the past, I've probably betted a little bit heavier than I should have. I think I'm shifting towards the mindset now where I take, excuse me, anywhere from sort of 5 to maybe 15% portfolio allocations generally. Just that's sort of the way I'm thinking through it. But I think that's an important idea. And my thoughts on portfolio allocation basically are that the lower the risk of downside, the higher portfolio allocation something can potentially have. So if we have a business like Apple, for example, in Buffett's portfolio, he allocated a huge percentage to that because he saw that, at the time they had this huge cash pile within Apple that they'd publicly come out and said that they wanted to offload a lot of that cash and do it through dividends and buybacks and so on. So I don't know if that entirely explains why there was limited downside. He was also buying it at a relatively cheap price, a very cheap price if you look at it now. So I think the lower the downside potential that you can see, the higher allocation it can have. But interesting idea around, keeping the guru's percentage allocation in mind as well. Nicholas, have you looked at Armada Hoffler REIT that Philtown bought? No, I'm familiar with the name and I'm familiar with Philtown buying it, but I haven't looked at it on the to-do list, which is rather long at the moment. John, come visit Southern California for the Pabrai meeting in 2021. Also, shout out After Dinner Investor. Yeah, that would be very cool. I'd love to go to a Pabrai meeting. I'd also love to go to a Berkshire meeting, but it's a heck of a long way from where I am in New Zealand. Steve, what's your take on Plexure? Never heard of it. Let me just quickly Google that so I make sure I'm not missing something stupidly. Plexure, okay, New Zealand company, 200 million market cap, software company, never heard of it. Honestly, sorry about that. Shashi Guru Focus, hey Tom, quick one. If your intrinsic value calculation, you consider the terminal value of 10 to 15 or 12 to 15 of free cash flow, have you looked at calculating the value of perpetuity cash flows instead of terminal value? Short answer is no. I use 10 to 15 actually as the range, and that's a straight up clone from Mohnish Prabrai's book, The Dundo Investor. I actually use lower than 10 in some of my valuations. I don't think I've ever mentioned that in a video, but I do that when I want to be particularly conservative for whatever reason. Maybe it's like a really cyclical business or something like that. So that's something I do. And the top end of 15 is basically like basically just trying to keep in mind that there's very few companies that have grown at really high rates for really long periods of time, and very few companies that have sold at high multiples for extremely long periods of time. And almost every business goes bankrupt eventually. Like if you look at the top 50 companies, or if you look even at the top 10 companies 10 years ago, or 20 years ago, or 30 years ago, or 40 years ago, you'll see that they're massively different. There's almost no overlap with very few exceptions. So just keeping in mind to be kind of conservative with that terminal value. I think Hamish Hodder actually has a good video on calculating terminal value if you want to be a bit more sophisticated about it though. Reggie Matthew, 3 US stocks and 3 NZ you would pick right now. Sorry, Reggie, that is not a question I'm going to answer. I don't give stock tips, so apologies for that. Drake, thoughts on Brookfield Renewable Partners? Haven't looked at it. Apologies. Roy, gotta go. Love your work. Cheers, Roy. Investing with Frank in the house. Hi, Tom. What is your favorite value multiple to consider when eyeballing a company? I personally like to use EV to sales, EV, EBIT free cash flow. Do you rely on any multiples more than others? No, I guess after reading the acquirers multiple, which is EV to EBITDA, I believe. Might be EV to EBIT. I'd have to refresh my memory. So I sort of use that as a reference point just because I'm kind of familiar with it. But again, those are always sort of surface level numbers. And price to intrinsic value is the thing that matters at the end of the day, which I'm sure you know, but that's kind of the way I think about those multiples. But they can be a useful starting point. I really don't use price to sales at all. If you're valuing a company on price to sales, it's generally probably too early stage for me to consider. So that's my thoughts there. EV to free cash flow would be, if I was going to design a multiple, it would probably be EV to free cash flow. The only caveat to that is you'd probably have to like normalize free cash flows because they can be very volatile kind of year to year. So that's kind of how I think about it. What have we got? So Henry, are you happy to sell a stock that has far exceeded your intrinsic value calculation, or do you let it ride until it runs out of steam? Yeah, so I don't have a simple answer to that. It depends on the opportunities available to me at any given point in time. So if hypothetically I have 10 stocks that I think are all super undervalued, I've fully invested 10% allocations to each, and I have no cash, then if something gets to intrinsic value, I'm pretty much going to sell it. Maybe if it's 90% of intrinsic value, I'm going to sell it and put it elsewhere, because in that world I've got lots of opportunities available to me. But if I'm, more like right now, finding, relatively few companies, I'm finding some things that are interesting, but relatively few. I definitely consider holding, because the alternative is going to go for that business to be sold and go to cash, and I'm kind of already sitting on some cash. So that's kind of the way I think through it. Certainly, the more ideas you have, the more willing I would be to sell something, assuming there's no like tax implications or anything. So. Drake Tom, do you have a favorite ETF? No, I basically just track the market. ETFs are a smaller and smaller percentage of my portfolio, but I own the NZ Top 50 index through Smart Shares. Don't just copy me because I said that. But that's what I own. It's a small percentage. If I was a pure ETF investor and didn't pick individual companies at all, I'd probably be a bit more diversified than that and pick a few different indices kind of around the world. So that's my thoughts on that. Samid, which ratio should be considered standalone or consolidated for PE? I'm not sure what you mean by that question. Sorry. If you could clarify at all, that would be great. Dive the World, ever considered copy? Oh, where's that question gone? That's run away from me. Dive the World, ever considered copy trading on eToro for some shorter term returns? I'm considering copy trading Karan. He takes positions for 3 to 6 months, but applies Rule 1 value investing principles to his trades. Yeah, I'm familiar with Karan. It's not a strategy I've ever considered. I'm just trying to stay in my lane, trying to do what I understand and what makes a lot of sense for me. So. Curtis Milner, when's the next video for stock picking competition coming? I think I've done 3 quarterly updates, so that would mean the final one would be right at the end of the year. I think I might have to check after this, but I was actually thinking about that competition just the other day. But I'm pretty sure the final update will come kind of early in the new year, which will be the final wrap up for that competition. Tyler K, what are your thoughts on investing in small caps versus growth catalysts with large caps that have an event resulting in 50% margin of safety? I ask because cloning gurus doesn't typically result in small caps. Depends who you follow. A lot of the people I follow invest in pretty small companies, not micro companies like tens of millions or anything, but certainly sub, a few billion. So yeah, depends who you copy, but I think small cap versus large cap, largely there's not a huge amount of difference in terms of the way I approach it. You're probably likely to find a lot more opportunities in small caps because they're less closely followed and so on. But you've got to be careful about making sure you get good information. If you're investing in a really, really small company, and the family owns 80% of it or something, and they kind of just paying out all the money in dividends every year and that kind of stuff, you just got to be careful about incentives and things in that smaller company. It's easy for management to kind of lead the business astray, much easier than it would be in something like an Apple or a Google that's massive and kind of everyone's watching. So those are my thoughts. Samed, yeah, I'm sorry, I'm not understanding your question on standalone PE ratio. So apologies for that. The Adventurous Investor, love your work, mate. Well done on smashing the Movember goal. When you're looking at buying a house, well, I'm looking at the moment, but it's just insane. Prices keep going up and everything like that. So hopefully sometime within the next year we'll kind of tick that off. I'm trying to not be in a rush because it seems like a lot of people are at the moment, and if I know anything about markets, it's be fearful when others are greedy. So if you've said that anywhere in any time in the last 15 years in New Zealand, that's been a mistake. But I'm just kind of being a little bit cautious there. Cam K, what do you reckon about the rumor of Buffett buying Tesla? Firstly, Buffett has 2 T's, so that's the first mistake. Maybe he took one of the T's, added it to the start of a Google search for Tesla stock, and I don't know what happened there, but if that happens, I will. Okay, if that news comes out tonight, I will keep the moustache for a year. How about that? So. There you go. Investing with Frank. In the past year, I have moved more and more towards a coffee can portfolio and never sell due to tax implications. Is this something you would consider, or what is your ideal holding period? Yeah, so I think, Frank, you're in Australia, so you're going to have different tax implications to us. So yeah, I don't know that I can tell you too much on that. Again, it kind of comes back to the previous question on selling in and around intrinsic value. It all comes down to sort of the opportunity set. So if I need money to put towards something, I'm gonna be more inclined to sell things. So yeah, that's kind of my thoughts. Quora's multiple is EV to EBIT. Appreciate that. Okay, and then Tom, let me ask you a question outside of the investment world. Do you also like cricket? You also play, obviously, your favorite team must be the Black Caps. Yeah, yeah, I did rock the Beige Brigade shirt the other day. So I haven't played cricket for a long time, but I was very into cricket at school. I was, first 11 cricket captain, actually. So captained the school team, was in that team for a few years, and it was a great time. But yeah, haven't played for a while, and favorite teams definitely the Black Caps. More locally, I support Northern Districts. I'm not sure if you're in New Zealand, but that's our sort of regional team, I suppose. So there you go. Matt, what do you think of Bill Gates buying BXP? He's been on fire with his picks and underrated. BXP is a REIT that appears more undervalued than SRG. Yeah, haven't looked at it. So maybe I need to add that to the list. Shashi Guru Focus, it's okay to share. What's your compounded annual return so far in your investing journey? Yeah, I've had this. I think I had this question on the previous live stream as well, and then Karan asked me this question as well. It's sort of, I haven't disclosed my annual rate of return on the channel before, and frankly, it's quite hard to calculate as well because I'm constantly contributing to my investment account. So the way I'm going to answer this question is I'm going to say that for a while, I have been looking to set up like basically a fixed dollar investing account so that it just makes it easier to track. Because if I do ever want to manage money and that sort of thing at some point, I need a track record. I'm sure I could pull it out of ShareSite, but I don't have that data handy. And even that said, if I was absolutely destroying the market or if I was lagging the market by a lot, I think that track record has to go over ideally at least like 3 to 5 years to be even meaningful. And I've only been investing for 3 years. So I could tell you any sorts of number, but I don't think it would be all that meaningful. But in due time, I will certainly share those figures because I think it's important to, understand whether people that you're getting your information from actually are doing any good themselves. So appreciate your question. Dive the World. Oh, let me just make sure I haven't skipped any. Dive the World. I see quite a few gurus buying BXP. Okay, I definitely need to check that out. Henry, do you find that once a guru starts investing in a company, then its price goes up as a result of this? Again, depends on the person and depends on the company. So there is definitely a very real Warren Buffett effect, even in large companies that those businesses can go up a lot in the very short term. And then I've seen it in smaller companies before. So After Dinner Investor asked before about GraphTech. So when Mohnish Prabrai first bought GraphTech, this was a business with maybe a $3 billion market cap. When that news first came out, I think it was up maybe 15-20% over the next week or so, and up about 30%, like probably over the next month or so, something like that. So particularly in those smaller companies, you can see the price move a lot. So yeah, that's kind of an interesting one to keep an eye on for sure. Sometimes you'd look though, and the prices are down a lot after really famous investors have bought in, and sometimes you can actually get better prices than those investors got, which is also a pretty cool kind of situation to sort of be in. Investing with Frank. I personally like companies less than 2 billion market cap with a good capital allocator, preferably with focus on buybacks and or acquisitions. How much do you focus on strategic capital allocation? Depends on the business, and I've probably been focusing on that more and more over time. Basically, what is the business doing with the money that gets, that money that the business generates? Depends on the business. So if it is, Coca-Cola that just prints money, has some long-term growth trajectory ahead, but can't reinvest all its cash, then obviously you'd like to see a lot of that distributed through buybacks or dividends. So paying a lot of attention to that. And I think there's a lot of companies that don't understand capital allocation all that well and will do buybacks at really high prices and won't pay out a dividend, or maybe they have some really good growth prospects ahead and they've got opportunities to internally invest in the business, but they keep paying out dividend money and doing share buybacks and stuff, which you kind of don't like to see. You ideally want a business that can invest back into itself at a really high rate. That's the ideal. If they can't do that, or if they've spent enough money on that where they can't invest any more on top of that, then it goes to the buyback or dividend question, and that's kind of the stock price will dictate how attractive each of those kind of things are. So that's my thoughts. But yeah, definitely need to pay attention to that. Chris Milner, if you could pick which one. Hang on. If you could pick which one, would you pick an hour with Warren Buffett or a day with Mohnish or a week with Phil Town? Probably an hour with Buffett. Like, that would just be unreal, I think. Yeah. If you go to like one of Phil Town's courses, I think you get to spend at least a bit of time with them. So that's doable. And Mohnish has got a lot cheaper price on his annual charity lunch auction than Buffett does. So I think you got to take the 1 hour with Buffett for that one. James Kim, hi Tom, I'm new to investing and I've started off researching online. Just wondering if you could recommend any textbooks on methods to analyze the market for beginners. Cheers and love the Mo Plus vids. Appreciate that. So not so much textbooks, but I guess the books that really helped me get started and start to understand and build a bit of a strategy, I guess, would probably be Phil Town's books. I read The Intelligent Investor by Ben Graham was the first investing book I ever read, and that was a massive mistake. Definitely shouldn't have done that. So it's just too... It's dry and heavy, and I didn't understand half the things he was talking about through a lot of those concepts because I was so new to investing in general. So probably the Phil Town stuff would be definitely a good place to start, and then you can move into the Intelligent Investors of the world and so on. Phil Town has a few books, but if you just skip straight to Invested, honestly, that recaps a lot of the previous books and also adds some new stuff as well. So if you don't want to read all three, being like Rule 1, Payback Time, and Invested, you can probably just skip to Invested. Mine Potential, do you reinvest dividends automatically for the stocks you own? Only for ETFs at the moment. Have done in the past for other stocks, but just ETFs at this stage. Hama Tian, if you buy your house on a fixed rate, that is your hedge against inflation right there. True. The only thing that is quite annoying here in New Zealand, I'm not sure if you're from New Zealand, sorry, but in New Zealand, we, like in the US, I watch a lot of, Graham Stephan stuff, for example, and he always talks about, just locking in a 30-year fixed rate mortgage. Those really don't exist that much in New Zealand. It's hard to lock in an interest rate for more than 3, maybe 5 years. So that is something that makes it a little trickier, to be perfectly honest. So, but if you could lock it in for a long period of time, absolutely agree. So. Tony asks, hi Tom, have you invested in any trackers for the MSCI index, for example, the Vanguard share exclusion from Invest Now, or XL from Invest Now? Sorry, I'm not exactly sure what you mean from Invest Now. But trackers, so I use, I hope I'm understanding your question right about basically tracking yourself versus the market. If I'm not, feel free to clarify. But I use ShareSite for that. So ShareSite has like a benchmarking tool built in, so I can track myself against an S&P 500 or a New Zealand 50 or a ASX 200 or all ordinaries or whatever I want to do in there. So that's kind of the way that I do that. Okay, Balaji, man, I apologize if I've been butchering names. I always do that in these videos. Hi Tom, I'm so grateful for your effort towards sharing valuable insights. Could you please share some light on value and REITs? Looking for your future videos and value investing style of REITs. So basically I guess we have a video on Seritage growth properties on the channel there. So there's basically two ways that we approach that. The first way was just a liquidation value. So if you sold all of the if you sold all of the properties today, paid off all the debts, distributed any cash available, what is that sort of liquidation value number? That's kind of one way of approaching it. And that's sort of what Brad and I did, or mainly Brad, I should say, with Seritage. And then the other way to do it is to value it like a rental property. So look at the cash flows coming in from those REITs. Do you think that cash flow can grow over time? Is it going to shrink over time? What's happening in maybe the local area where that REIT's based, or is it diversified across an entire country? What's kind of happening there? So yeah, that's kind of the way I'd look at it, and then you can start to decide, if this REIT's generating $1 billion a year, what am I willing to pay for that? So to get like a 10 cap, for example, a 10% yield, you'd be looking at paying 10 times that, for example. And maybe if it was growing, you'd be willing to pay a little bit more than that, because you know that yield's growing over time. So that's sort of the way that I think about that one. Hey Tom, what investing books are on your to-read list? Let me just look up at my bookshelf. I've got a few up there. So for ages now, I've been trying to finish Bull by Maggie Mayher, which is like a investment cycles kind of book, which is interesting. And I'm just going to pull up the rest of my reading list here, just so I can tell you, because I've got some others that I've been meaning to get to, but I've been quite slack with my reading this year. So what else have I got? I need to finish Margin of Safety by Seth Klarman. I need to finish getting through the Buffett letters, which I'm working on at the moment. There's actually a lesser well-known book that I heard on a podcast called Creating Shareholder Value by Alfred Rappaport. I hope I pronounced his name correctly. All those are ones I need to get to, so that's kind of what I'm looking at the moment. And I've just looked at my phone, and we've had a $20 donation from Cam, so I appreciate that, Cam. We've ticked well over $1,800 on Movember now, so that's unreal. So appreciate that. All right, let's keep moving. I think we might just do a few more questions. If the questions keep coming through, I'll just keep answering them if you like, but I'll try not to keep you guys here all night. So next question is from Shannon. You're busy here. How many streams of income do you think it is wise to have? Yeah, interesting question. I think there's a lot of people online and stuff that you'll see, they'll say, you got to have 5,000 different sources of income. And I agree with that to a certain extent. Like it's great to have sources of income outside of your everyday job and not be reliant on one source of income and so on. But if I take myself personally, I could create many more streams of income than I currently have, but creating more streams of income might not necessarily correlate to more total income. So for example, at the moment, I'm focusing a lot of effort on YouTube and trying to scale that as much as possible. I could pull time away from YouTube and, like write an ebook or something, or go milk some cows in the weekends or something. But those things would potentially equate to less profit, less income overall, because I've spent less time on YouTube, which is arguably much more lucrative. So I think definitely having more than one income stream is important, but largely it's focusing on, what can potentially produce the highest total income. So hopefully that kind of makes sense. Henry, I agree with you about Phil Town's Rule 1 strategy. Easy to follow. I think everyone can follow it. Yep, absolutely. There's definitely some things in there that are probably simplified. I don't want to say oversimplified, but Phil Town does, simplify things a little bit. But he also tells you to stick to really simple businesses with not low debt and that sort of stuff. So, great starting point. Investing with Frank, I have an extremely concentrated portfolio, 2 stocks, 1 ETF. Although more risk, I've had a 60% plus return this year. What are your thoughts on concentrated versus diversified portfolios? You've basically explained it in your question. So the more concentrated you are, the more volatile your returns are going to be. So you're going to have really good years, really bad years. And if you can stomach that, that's fine. I will say that there's certainly a limit to how diversified you should be. So if you buy, and there is actually research on this, I don't know the exact numbers off the top of my head, but it's somewhere in the 10 to 15 stock range. If you go over and above that, there's actually no extra advantage to diversification in terms of trying to smooth out the volatility. So that's some research I've seen. I tend to lean more towards concentration, certainly, but I've never been as concentrated as you're saying, Frank. least I don't think I've been, unless I had a bucket load of cash on the side or something. By my standards, not like Buffett standards or anything. But that's the risk you take. Yeah, it's volatility, and then frankly, you also have more risk of blowing up, of going to zero, or having a significant permanent loss of capital, which is probably the thing you would want to pay more attention to than simply volatility. Volatility, it is what it is. Like, if you've got the stomach to handle it and you know what the business is worth at the end of the day, then that's fine. It provides more opportunities. But if you're wrong on a business and you only own 2 stocks, yeah, things can go south pretty fast. So some level of diversification is needed. I know Buffett came out and said he, would have 50% in one stock if he only managed a small amount of money. But I think it's important to understand that we're not Warren Buffett's, so as much as we try to be. So Ashley Suarez, how to analyze insurance businesses and how to value insurance businesses. I'm certainly no insurance expert. That's Buffett's bread and butter, but I'm not an expert in that. I've heard people talk about book value being a reasonable proxy, but it's hard to. Insurance is a hard business. So, I mean, the insurance business is basically taking on money in exchange for a promise that you will potentially pay out at a later date. If someone crashes their car or their house burns down, or something gets stolen or whatever it is. So that is inherently a difficult business in a lot of ways, because you can make a lot of money in the short term really, really easily by selling really cheap insurance. You could offer car insurance at half the price of your next competitor, and that would attract a lot of business, and you get a lot of cash flow in the short term, and your business would look really profitable over the next year. But then when you actually start getting claims come in, you're not going to have enough cash to pay that money out, and you're going to blow up. And this is a space where Berkshire Hathaway has been really, really good. They've been extremely rational about trying to price that insurance as well as possible, and that's why it's worked really well for them. So it's easy to fall into these pitfalls in the insurance business. So that's certainly something to kind of watch out for. And the other thing that impacts insurance businesses a lot is just interest rates. So, I mean, insurance companies are basically just investment companies. All they're really doing is taking money, holding it while they wait for someone to make a claim, and they're trying to earn money on it in the meantime. They might make a small profit, maybe 1 or 2% of the kind of initial money that they receive. They might make 1 or 2% on that in actual profitability from versus what they pay out. But really, insurance businesses is about trying to make money in the meantime while you hold on to it, while you hold on to the float, like Buffett would call it. So if interest rates are low and you can't invest in safe fixed income securities like a lot of investment companies have done historically and earn a good return, then that can make the insurance business kind of hard as well. So those are my sort of thoughts on that. All right, what have we got next? So Tyler K, if your background is in agriculture, how do you learn to invest? Just read a bunch of books, online courses. Yeah, basically just read a bunch of books and watch YouTube. That is honestly the answer. That's literally all I've done. I've looked at online courses. There's a lot of. It's hard to say what you're ever going to get out of a lot of these online courses on YouTube sometimes. So I've never done a course. If I was ever going to do a course, I think I would probably do some sort of formal course on accounting, frankly. I think I understand a reasonable amount about how businesses work, how they function, unit economics. If it costs you X to produce a widget and you can sell it for Y, and I understand that kind of stuff pretty well. I think accounting would be an area that I could work on, though. So that's, if I was ever going to do a course, it would probably be on that area. And the other thing I should say, even though I work in like an agricultural business, it is like a software business. And I've been involved in a lot of the, day-to-day strategy of how that business operates to a certain extent. So I have actually learned a lot about business from, that agriculture role. So yeah, those are my thoughts. Matt Constable, bench, deadlift, and squat PBs. Okay, so I'll give you the numbers. I hit at last year's powerlifting nationals. I squatted 265 kilos, benched 157.5 kilos, and deadlifted I actually think I deadlifted 272.5 kilos at that competition, but I have hit 280 kilos in competition before, and those were all in the under 105 kilo body weight category. So there you go. Nicholas, how do you account for high levels of debt when looking at a company? When is lots of debt okay for you? Yeah, try to minimize it as much as possible. Debt can be okay sometimes, but you really have to know what you're looking at. Like, for example, this is not the case with Seritage. No, it's not the case with Seritage at all. But with some REITs, for example, you can have all these different investment properties, and each investment property can have its own kind of bubble of where the debt is kind of just contained for that one property. It's non-recourse, so it can't flow through. If that one property falls over, it can't fall through and kind of domino the entire rest of the business. So potentially in those cases, it might look like a business has a substantial amount of debt, but it might be concentrated just on a couple of properties that can not actually have flow-on effects back to damage the overall business. So that can be interesting. But largely, debt's one of the few things that can really kill a company. So try to minimize it where possible. Shashi, gotta go. No, thanks for watching, mate. I think we'll finish up here pretty shortly, but I'll just take a few different questions. What's your thoughts on Tesla? Do you think it's a super bubble? I'm going to get crucified if I tell you yes to that. Look, I think what I will say is the higher a stock goes, the higher the bar in terms of how much cash that business has to return to you over time. Certainly, you can buy it; it can go up a lot in a week or 6 months or whatever, and you can sell it to the next guy for more. But at the end of the day, over the long term, if you're looking for 10, 20 years or something, the business has to produce cash flow and return cash to you to some extent in order to justify a valuation. And the price of Tesla has gone up a lot, and the amount of cash that the business will have to produce has gone up a lot. And by my very rough maths, we're probably talking like 40-50% growth rates compounded per year for the next decade to justify some of those prices. So potentially, I mean, I'm not going to sit here and say that that's impossible. There's a whole bunch of people that know a lot more about Tesla than I do. All I'm going to say is that is a game that I'm not going to play in because I don't know how to answer that question. And I think the risk that they don't execute on those growth rates is it's not small. It's a significant risk that they don't hit those numbers. And I would much rather invest in a business where, I think it can grow at 10% a year, but it's priced as if it's going to grow at 0% a year. And even if they, don't perform as well as I'd expected, I'm still going to get a reasonable return. That's kind of the game I like to play in. Tyler K, what are the odds of you doing a shoey to celebrate successful Movember fundraising? If I wasn't just sitting in the corner of my bed, maybe I'd consider it. Shashi has just donated $50. I've just had a donation come through as well, so that's awesome. I appreciate that very much. Okay, I'm just going to pick a couple of last questions here. And actually, sorry, before I do that, I am actually going to go through and donate to Movember now because, like I said at the start of the live stream, I need to do my donation for the last Mohnish Movember video. It's doing quite well at the moment, so I haven't seen the analytics come through, but for previous videos, I've donated anywhere from $20 to $30, I think it is, depending on how much ad revenue the video's generated. And in this case, the views are going pretty well on this last video. So I'm going to push it up and I'm going to donate $40 for this particular kind of last Mohnish Movember video. I'm going to put that through right now as I'm doing it on the live stream. And if you're interested in donating and want a shout out to, now's probably the time to do it. No pressure though, of course. Verify. Oh no, I need to fill out my details. This is probably really boring for everyone to watch, but I'm gonna put that all through now. Bear with me, I will answer a couple of questions very soon. I think that worked. That's really weird. Okay, I'm having some issues with my Movember here. This is not the time to have issues with that. What is going on here? Donate. Done. Are we done? Okay, this isn't working. I'm gonna do it. I'm gonna come back and do it very shortly. Maybe I'll do it after the live stream. But I do certainly appreciate everyone who's donated. Let's pick maybe 2 more questions. I'm just gonna scroll through, answer a final couple, and then I'll let you all go. So what have we got here? I'll just see where I got up to. I think I answered the shoey one last. What have we got? Oh, thanks for the kind words, Matt. I appreciate that very, very much. Okay. Non-investing question. Do you watch UFC? Who is your favorite fighter? You've got to go Israel Adesanya purely just because he's from New Zealand and he's doing awesome. Otherwise, probably like Conor McGregor. Not really particularly for his fighting prowess, just because of his trash talk. That's what keeps it entertaining for me, for sure. Great. Well, I appreciate everyone coming along. I think we will probably wrap it up there. Like I say, I'm going to, as soon as we get offline, figure out what's going on with Movember. But I really, really appreciate everyone who's supported. This is going to be the last time that you see the moustache on my face till potentially sometime next year. If you're interested in me doing this again, let me know. I think it was kind of a cool series to do Mohnish Movember. If you've got anything else that seems to fit like the Movember name, Mohnish Movember has a nice ring to it. If you can think of anything else that we could do next year, definitely fire those ideas through to me, either in the chat just here or maybe in the comment section of the live stream afterwards, or even just flick me a message on Instagram or something like that and let me know if you got any ideas, because I'm keen to do this again next year. Potentially it is a really good cause to be supporting. So appreciate you all coming along. Again, I'll try to do these live streams more regularly, but appreciate you watching, and I hope you all have good evenings or mornings or days or wherever you are in the world. So I will see you all later.